Hello, everyone. Welcome to the live stream. So let's wait just a little bit before we get into the meat of the event. Let's wait for some more people to join. But anyway, if you guys have any questions or chart requests, make sure to put them in the chat. I have my chat open here on the right side of the screen, and I'm going to answer every single question. In terms of the markets, we have had a lot of events in January. So now it is the 30th of January, meaning February is basically coming up next week. January is done. It hasn't been the most active in terms of setups. I have taken one trade, which I'm going to show you. I took it today, actually. So I took one trade, and yeah, there hasn't been a lot of setups according to my strategy on the 1 hour chart, just pure price action. I wouldn't say even that the markets were moving a lot. How can you determine that? Well, you can just jump on the daily chart, and then you can see the general movement. We have been kind of stagnating a bit. This is the euro and the US dollar, the most popular currency pair, and EJ or the JPY pairs have been also a bit flat and stagnant right here. So that is kind of the story for January. I am interested for you guys to tell me, how has your January been? Have you taken a lot of setups? Have you been very active in the markets? You can put it in the chat. Okay, so we have a couple of people have joined now. And let's start. I want to give a brief introduction in terms of the fundamentals. So don't click away, because the fundamentals are very important, and I've been really getting into them. I am currently in my live trading a purely technical trader, but I'm definitely looking to implement either fundamentals as an extra confluence, or maybe a whole nother strategy that has to do with fundamentals. So I'm still looking into it, still researching the major events. So what drives the currency markets? Well, the biggest driver in the last few years have been interest rates. And who determines the interest rates? They are determined by the central banks. Okay, so the main event, the most important event for us, is going to be the Fed meeting, the European Central Bank meeting, Bank of Japan meetings, Bank of England meetings. Okay, and in January we actually had, from what I have researched, is the Fed yesterday, ECB, so European Central Bank, it was today, and then we also had the Bank of Japan hiked rates. So they raised rates. What does that mean? Also, one more big event that we had was Trump coming into office. I think it was somewhere here in these boxes. Yeah, you can see it here. So it was on the 20th of January at 5 p.m. my time, and it was inauguration day. Hope I'm not butchering that, but that's Trump coming into office. So yeah, in January, a lot of traders, investors, bigger players were sitting on their hands, waiting for Trump coming into office, waiting for the Fed meeting, waiting for the ECB meeting, and possibly the Bank of Japan as well. That is just for the currencies that I trade. You can see that the 6 main ones, so EU, EJ, AU, AJ, pound, US dollar, and NJ. Now, a brief summary of what happened with the actual meetings. Okay, just a brief summary of where we could be headed in the future, where we could be headed in the next 2 to 3 months. So I'm going to start with the euro and the Japanese yen, because this one actually had, so the Bank of Japan had their interest rate on the 24th. So if you go to the 24th, see BOJ interest rate decision. Let's go to the 1 hour. It was right here, I believe. Yeah, BOJ interest rate decision. And you can see that they increased the number. Okay, so the actual number was 0.5, the interest rate. Previous interest rate was 0.25. So they raised rates. What does that mean? That means the JPY, the Japanese yen, is going to gain value. And that means my JPY pairs that I trade are actually expected to lose value. Okay, so these three currency pairs are expected to go down, and they have actually been going down from that point. EJ lost, so from that meeting, it lost, let's see, around 1.3% of its value. So it definitely went down overall. You can see the power of the fundamentals. They definitely move the markets, but you must look at it from kind of larger time frames. You must give it a couple of days and weeks to play out, but you can definitely have an extra confluence with the fundamentals. So that's the first one. What is this? Okay. My forecast for the JPY pairs is to actually fundamentally to continue going down. So for this to happen, which is interesting because it did take a sell setup on AJ. It was right here. So let me just point that out. I did take a sell trade. Now, it had nothing to do with fundamentals, to be honest with you. It was a purely technical setup because still for my live trading, I only look at technicals. Okay. But anyway, we're going to go through this sell setup a bit later. So I kind of was with the general fundamental downtrend. So that was pretty good. Insurance Casino says 160.5. Awesome support area. Yes, I would say so. Although I don't look at support and resistance levels. 160.5. Yeah, somewhere around here. You could definitely say that this was a support level, but again, it's not really something that I look at. Let me see on AJ, I think it was even major support. Yeah, so this was definite support. This is a big level at 95.53, let's say. Okay, so getting back to it, that's the Bank of Japan. So we expect the JPY, the Japanese yen, to keep raising in value. Now, we also had the Fed meeting yesterday. You can see the box. See, it was 29th of January, and it was pretty much a neutral event. So the Fed didn't really say if they were gonna hike rates or if they were gonna cut rates. So they were pretty neutral about the whole thing, and the market actually went flat. So nothing really came out of that. Pretty indecisive price action. Then today we had the ECB, which I watched both events. They were pretty boring events, I'm not going to lie, but something you have to do when you're doing fundamental analysis. So we had the ECB press conference, initial spike up, so initial bullish pressure, but then a complete correction. To be honest, the press conference was pretty flat, pretty uneventful. Nothing much was said. The overall direction of the interest rate for the future, or as they say, forward guidance, was not discussed at all. So we don't really have a general idea of what the Fed or the ECB will do in the future. So if I had to sum it up, Bank of Japan, bullish for the Japanese yen. Fed, pretty neutral on the dollar. ECB, pretty neutral on the euro, but expected to cut rates in the future because they just cut rates today. Now, there's a bigger story overall. The bigger story is that Trump is going to most likely start introducing tariffs. Now, tariffs are going to be very good for volatility, I would say, very good for trends. For the market, I'm not sure. For the economy, what's going to happen to the economy, we will have to see. But for us as traders on currencies, I think it's going to be very, very interesting. 2025 should be a pretty good year. So everyone is waiting to see what will happen with the tariffs. When will Trump actually start heavily implementing tariffs on imports? So on imports of products that are made outside of the United States, right? He wants to put tariffs, especially on China. I think he wants to heavily put tariffs on China, on China, but maybe also some other, even European countries. So Insurance Casino says they kept his last tariffs. Okay, yeah, I'm not a tariffs expert, to be honest, but I know there's a lot of talk. From what I can see, there's a lot of talk and everyone is really afraid of the tariffs. So that will for sure move the market, because uncertainty is a big catalyst for trends. Okay. So what is my game plan? Well, my game plan is to keep trading my technical strategy. Just looking at momentum, looking at the 1 hour, looking at price action. But again, on the side, I am researching the fundamentals, looking to see where I can implement them. What can I do? Where can I implement the trading edge that you get with analyzing fundamentals? So that's the game plan. The best thing to do for me would be probably to have two separate strategies. So the first strategy would be the one I'm currently trading, like pure technicals, 1 hour chart, EU, and D6 currency pairs. And then the second one could be fundamentals on, let's say, the lower time frames, and maybe trading around central bank meetings. That could be possible, but again, I'm still gonna look into that in the upcoming months. You cannot really devise a whole strategy in a couple of weeks. You need to do the research, which takes a couple of weeks or even a couple of months. Then you need to implement that research in your live trading. You need to test in the live markets, does your thesis or your trading edge actually work as it does in backtesting? So I need to give myself some time to test out the trading edge that I'm trying to build. So yeah, that's about it for the whole fundamental intro. I hope it wasn't too boring. I hope you also learned something new, because I think it's super important to know that as a trader, you should pretty much know everything about the markets that you're trading. So you don't have to know what is happening with oil, stocks, Bitcoin, gold. But if you're trading Forex, you should focus on Forex, and you should pretty much know everything that you can about the instrument that you're trading. So I'm trying to really get into Forex. If you want to know about every single market, so look on my watch list, I have indices, I have gold, I have Bitcoin, I have US oil. It's pretty much impossible to become an expert in every single instrument, but I can become an expert, fundamental expert, in these six currencies. It's not an easy task, but it can be done. So now is the time to just do a general technical analysis of the charts. Okay, just a general technical analysis, starting with the euro and the US dollar. First one on the list. I mean, we were cooking something. I saw some potential, but nothing really fit my plan 100%. So fundamentals do have value. You are right about the tariffs. They should move the markets. Yeah, fundamentals absolutely have a lot of value, as do technicals as well. Again, the problem with just purely technicals is that, well, you sometimes can get no trades, and you may get periods of like basically no drawdown or no trades. So why not try to implement fundamentals, try to get maybe another strategy, or get into more trades, or increase the win rate? So I think it's a pretty good move, and fundamentals definitely do have a lot of value. I can give you an example straight away with EJ. So right here, where was it? Here. So here, Bank of Japan actually raised rates for the Japanese yen. That means the JPY is going to raise in value, and EJ is going to go down. That's exactly what happened. We have went down overall, like bigger picture stuff. Bigger picture stuff, we have went down minus 1.39%. So that's how it works. And it's not set in stone, so you cannot have like 100% win rate if you trade fundamentals. It's not going to give you 100% win rate, but it can increase it from my current win rate is around 20 to 30%. It may increase it all the way to 50%, which is not bad. That's like a 20% increase, which is amazing, or even a bigger increase. But anyway, so the win rate could go from 30 to 50%, which is awesome, in my opinion, if you can implement fundamentals with technicals. So EU, here, I was looking for a reversal right here. Also, I didn't do a live stream last week because the markets were not that active, but I didn't take any trades either. We were pretty flat and corrective overall. And this week, this is what I was looking at. Faceless says, Marco, where are you from? I'm from Croatia, the country of Croatia. It's a small country near Italy. And I'm from the capital of Croatia, which is Zagreb. So where are you from? And yeah, we're seeing a nice descending here on the euro and the US dollar. I saw like my audience in my YouTube stats or analysis. Most of you are from the United Kingdom, which is pretty cool. You're from Serbia. That's pretty cool. Pozdrav za Srbiju. So he's actually my neighbor. He's in a neighboring country. But I saw most of you are from the United Kingdom. And Traveler, hey, what's up? I'm not gonna tell your name, so you're fine. And some of you are from the United States, which is great as well. And also from India. Those are, I think, the top 3 countries in the YouTube tab. Sorry. Anyway, getting back to the euro and US dollar, we're descending here, and price is breaking the lows and retracing, so leaving wicks, which was a pretty bullish scenario. So usually this sort of a pattern is bullish. I was looking for like a big bullish impulse and then to get in on some buy setups. It never happened. Yeah, no worries. Yeah, we're gonna keep to English because most of people that are watching speak English. Never got the impulse up. Never got it. Just ended up being pretty corrective right here, and then we dropped. Did we get a lot of selling pressure? Man, not really. Then we were flat. Then we had this ECB thing. So interest rate decision, there was a cut. And then we basically are just kind of flat. Yeah, we're kind of flat and corrective. And I'm being patient. Am I going to put this one on the watch list? No. I do classify this price action as being too corrective. So my forecast is going to be to just look at a large push up or a large push down like this. EJ is the next one on the list. Looks pretty descending right now. So let me scan if I saw any opportunities. I have to scan the last 2 weeks because, again, last week I didn't do a stream. Here, I like this. I mean, it was kind of like a V reversal pattern, which is for you guys that don't know, a V reversal pattern is this, and it's a bullish pattern. So I currently trade patterns, okay, on the 1 hour chart. We have ascending, descending channels, we have V reversals, we have even cups and handles, head and shoulders. We have trending setups, so like an established trend, a corrective trend, and all sorts of combinations in between. So I basically trade purely patterns. And it's been working for the last 3 years. We have had like my friends and I have had some pretty good results. If you guys want to learn the way that we trade, you can check out zentumtrading.com. So you can join the free Discord. If you like it, you can get into the paid section as well. So I highly recommend checking that out. This one didn't play out at all. So we just went pretty corrective right here, and then nothing happened. Broke the low, retraced. Now we're pretty descending. So again, a descending pattern is a bullish pattern. Did I like this momentum? Yeah, it was pretty good. It was pretty good. I was potentially looking for some sell setups, but nothing came out of that. Instead, we just got a big blue candle, which doesn't fit the plan. So my main goal is to get in with the momentum. And if I'm seeing a lot of selling pressure, like I was seeing here, a lot of selling pressure, and then I see a big blue candle, that's kind of not the best opportunity for me, because we had the sellers in control and then immediately the buyers stepped in. You don't want to be a seller in that sort of a market. Right now, this one is not on my watch list, and I'm just being more patient. The best scenario for me personally would be if we can descend a bit more and then reverse up, and then possibly get in on some buy setups along the uptrend. So that's my game plan for the euro and the Japanese yen. It's not that interesting, to be honest. Aussie US dollar is, I would personally say, a lot more interesting. So in terms of setups in the past, well, you could have considered a reversal setup here. A reversal setup is a ascending channel, and then a drop, and then you get in. And in a lot of cases, price will drop, continue going down, okay? So that's kind of what you saw here. You saw an ascending channel right here, and then you saw a drop down, some momentum, but the momentum was not the strongest. Not the strongest for me. We just kind of left some wicks right here, and I did not really like this price action. I wanted to see like a big red candle. I wanted to see something like this happen, and then I would be interested to look for a sell setup. Okay. Then we went lower, and now we're descending. And this is a pretty good descending. So when I'm looking at a descending channel, I want to see price only break the lows like this. I don't want to see like breaks of structure like this. So for the price to break the highs. And here we're pretty much breaking the lows here, 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 here. So look at the dotted lines. They represent the breaks of the lows. So I am actually going to put this one on the watch list, and I will look for a reversal setup. So if we can descend a bit more and then get a reversal, that would be pretty high probability to get in on a buy setup like this. That's my game plan. Looks pretty good. I do like the current price action. Again, today is Thursday. We just have a couple of hours left of Thursday, and then we have Friday, just one day. Are we gonna get an entry tomorrow? I don't think so. We just don't have a lot of time left. Maybe we can get an entry next week. Okay. So that is what I will be looking for. I'm mostly going to focus on the next week because it's going to take some time. This is the 1 hour chart, so it's going to take some time for the price to develop. In terms of news events last week, a quick scroll. We do have some news, but it's not like CPI, it's not PPI, if I'm seeing that correctly. So it's not really that volatile. Like the news events coming up are not going to be that impactful on the price just by a quick scroll. So that's it for AU. AJ, here I did take a trade. Damn, this would be... I got stopped out. This was a loss. But if I didn't get stopped out, this would be currently running percentage. But let's first go through some setups in the prior price action. What did I like here? I was looking for a buy entry, but then we got too much selling pressure, so that I did not like. Then we were pretty flat and corrective. We gapped lower. That was after the BOJ. So we had the BOJ interest rate decision, and then we had a bit of a gap over the weekend. Interesting. But you can see an immediate reaction, almost an immediate meltdown after the BOJ. So if you were a fundamental trader, you would be very bearish on the Aussie and the Japanese yen. You would be very bearish. The reason is interest rates have raised for the yen, which is bullish for the yen. Large drop, corrective, and then we get this. So let me tell you why I got in. It was not because of the fundamentals. Again, I'm still a purely technical trader in terms of my live trading. And this was I would say like a 9 out of 10 setup. I only focus on 9 out of 10 and 10 out of 10, like absolute no-brainers. So I'm pretty picky about my trades. And this was as I said, a 9 out of 10. What do we have? Well, overall, price is moving down. That's pretty clear. Just by looking at this chart, the technicals are telling me that we are pretty bearish. This is definitely moving down. After that, we get a nice push, one candle pullback, and then we break the low with a nice red candle. So this is a very high probability setup. I have seen these setups play out like at least like 100 times in my back testing and in my live trading as well. We have taken a lot of these types of trades. It's called, you could say this is kind of a downtrend, getting in on a downtrend, but this would be a break and a retest trade. So price goes down, pulls back, breaks the low, and then retests this level of the inside bar. What's an inside bar? An inside bar is a candle that is inside of the previous candle. So the high is lower than this high, the low is higher than this low. Look at the numbers above. Okay. So yeah, good setup, good trade. I placed my sell limit, 13 pip stop loss. As you guys know, so recently I have switched from a fixed stop loss to just a quick visual adjustment, visual assessment of the stop loss size. But usually my stop loss is always going to be somewhere between 10 to 20 pips. That's the general rule. Between 10 to 20, something in there, in that range is going to be good for me. So if the volatility is a bit high, I'll have a bigger stop loss. And if the volatility is, we're getting some technical difficulties, but if the volatility is low, then I'm going to have a smaller stop loss. TradingView has been acting up lately. I don't know why. So it's just so buggy. And if you use the replay function, it just bugs out, especially during the afternoon. So always in the afternoon, if I'm backtesting at like 4 or 5 p.m., it's just crazy. It doesn't want to go into the replay mode. I don't know why. Hopefully they fix it soon because it's getting pretty expensive. Like TradingView is getting pretty expensive, I would say, if you want the data. So I paid for the premium data, which is this thing like premium subscription. It's like 40 euros or 50 euros per month. And that's pretty expensive if you're like just starting out, if you're a student. So yeah, I don't like that. I liked when TradingView was cheap and when you had a lot of data with the essential subscription. I think they changed something around. So getting back to it, sell limit This candle actually tagged me in because I placed my order 1 pip below. So 1 pip, oh no. 1 pip below, and this one magically did tag me in this candle, and then price went into profit actually, and then it reversed all the way back up, took me out for a loss. And I did lose the Alpha Capital challenge stage 1. So I had an Alpha Capital 100K in stage 1 or in stage 2. Yeah, in stage 2. And unfortunately, with this trade, I did lose that challenge. So now I have only the FTMO 50K live account and the Alpha Capital 50K live account, only 2 accounts, and the DarwinX account. Okay. So I'm going to have to buy some more challenges. Of course, I'm going to go with FTMO. It's an absolute no-brainer. FTMO is currently the absolute best prop firm in the markets. This was a loss. If I had a bigger stop loss, I would still be in. What you going to do? So if I had a 15 pip stop loss, I think I would still be in. Depending on the spreads, but maybe not. Maybe if I had like a 16 pip stop loss, or let's say even a 20 if I had, but this one looks very big. I would definitely not have a 20 pip stop loss. So yeah, I got taken out by like 2 or 3 pips. Happens, part of the game. So current price action on AJ, not looking the greatest. We have broken the high here. It's a bad sign. It's a sign of a more corrective market. Then we broke the low, and now we again broke the high. So this one is not going to go on my watch list, and I will remain patient. Something I would like to see. Overall, I would say we have started to descend. So if we can continue descending like this, and then reverse up and get an uptrend, that would be high probability to get in on some buy setups. Okay, so that would be pretty high probability to get in on some buy setups. Current price action is not looking the best, so I'm just being patient and I'm waiting it out. Next one on the list is pound US dollar. So pound US dollar is pretty corrective right now. It's super flat price action. Just not doing much here. Not on my watch list right now. In the per price action, there was no flag here. A flag did not print. The only part of this price action that was interesting was here. So at this point, I started to see a nice uptrend, and I was actually starting to look for some buy setups. Unfortunately, we could not get a high probability entry. We just got too much selling pressure, so that negated my whole game plan. Currently, I am just waiting for a breakout to the upside or to the downside, like this. Let me just see when the next interest rate decision is. So Bank of England, interest rate 2025. Let me see. I haven't yet started researching the Bank of England interest rate graph. Okay, United Kingdom interest rate. Looks like actually, so yeah, I'm not sure. I think in February. I think we have a meeting in February. Okay, in February, I think we have a meeting. I'm going to double check. After that meeting, we could start to see a bit more activity on the pound US dollar, because now we're super flat. Now we are just flat, and we cannot make much percentage in this market condition. Next one on the list, actually the last one that I trade live, is the New Zealand Japanese yen. NJ. Pretty similar to AJ. If I take a look, what did I like? Well, here there was a setup, not enough momentum for me. Here I was looking for potential buy setups. Again, we got too much selling pressure in the pullback. The pullback was not good. Here we got some nice selling pressure. I was looking for sell setups, but then we just broke the low and we retraced. We did not get any high probability entries in the pullback. Went flat. Here again, we're looking for sell setups. This was looking pretty good. I like this impulse. I like the momentum. Overall, we were definitely trending down. And then ignore this dotted line because it's wrong. Because actually, if you look at the low, it's the same. So the low is the same. That means I classify this thing, instead of being like a pullback and then a continuation, I actually classify this thing as being one big impulse. Okay, so for me, this was one big push down. I was looking for a flag. I was looking for a break and a retest. Anything I would have taken because this looked pretty good. Nothing formed. So no flag, no break and retest. We just pulled back, broke the low, huge wick, retrace. Huge wick, retrace. So pretty bad. Not on the watch list. Looking pretty corrective right here. And I'm being patient. I'm being patient on NJ. So unfortunately, only one candidate for some high probability trades. That is the Aussie and US dollar. I like the overall formation of the descending channel. And I'm possibly looking for some reversal trades on the Aussie and US dollar. Okay, that's going to be the general game plan. Now what I want to do is I want to flip the script. I want to go to some indices, gold, Bitcoin, which has been crushing, and US oil. I think US oil started moving as well. Damn, this is a pretty big move on US oil. So if you're trading oil, there's definitely some opportunities to get in. Definitely a trending market, but let's not get ahead of ourselves. When I analyze these instruments, I like the daily chart. I think it's the easiest to get a picture of what is happening, and then I may zoom in on the 1 hour chart. Starting with the most popular one, everyone knows the S&P 500. Everyone likes to trade it, I think. At least in the US, they love to trade the S&P. They are not really big on Forex. They like indices more. They like stocks more in the US. Forex is really popular here in Europe. This is bullish. This is bullish. I expect more upside. I do know that everyone was calling for a crash at this point, which was Friday, or actually, let's say Monday this week. Everyone was calling for a crash. We're gonna crash. We're gonna do this. We're gonna do that. Market panic. But then we recovered pretty quickly. That's exactly what the S&P does. We drop massively, then we recover, and a lot of the time we actually continue grinding higher. Okay, so yeah, I'm still pretty bullish on the S&P. Nasdaq, pretty much the same story. The Nasdaq does like to follow the S&P 500, so you're gonna see very, very similar price action. Also, there was a big drop, but then a quick recovery. So sell-off, but a recovery, and I'm bullish. I do expect more upside on Nasdaq, US Nasdaq 100. Now, before we get into gold, wow, gold is really moving up. This is pretty bullish. Before we get into gold, I just want to mention I got an email from my broker today actually, and they gave me a calculation of all of my trading fees for 2024. And when you do the maths, when you look at my profit and like the fees, I think the fees represent 25 to 30% of my profits. So that's huge, that's massive. I'm paying a lot of fees, and it's not just me, it's even like professional traders. In most books that I read, or like some online posts, even professionals are paying 20, 25, 30% in trading fees, in trading commission, spread commission, this, that, swaps, blah, 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 blah. So you have to take that into account. If you're a scalper, if you're taking like 3 trades per day, you're done. I mean, your edge is extremely small. I'm taking around 100 trades per year, okay? And with the more trades that you take, the bigger your trading fees get. So if I'm taking 100 trades per year and I have 25% of trading fees, well, basically, if you're trading, or if you're taking 400 trades per year or 500 trades per year, if you're like a day trader or a scalper, it's going to be pretty bad. Your fees are going to be absolutely massive. So how many trades per week am I taking? Around 1 to 3, I would say. Some weeks it's 0, some weeks it's 3, some weeks it's 5, but I would say average trades per week is around 1 to 3. Average trades per month is around 4 to 12, I would say. Let's say 4 to 12. Yeah, I think I got the maths right. So that's what I'm looking at. And average per year is around 80 to 100. That's what I have seen in the last 2 years. I have actually did the calculations. So watch out if you're trading on the lower time frames, because the fees will absolutely kill you. And when your fees go up, your trading edge goes down. Okay. So when the fees go up, your trading edge goes down, because you need to make more money because of those fees. So it's a very, very tough game. I recommend staying on the higher time frames and not taking a lot of trades. I know everyone says that trading is like a zero-sum game. Trading is actually a net negative game. So a zero-sum game would be that, let's say you have a break-even strategy and you end up with a 0 at the end of the year. But if you have a break-even strategy, you actually end up negative at the end of the year. What is the reason? It's because of the trading fees. So immediately when you come into trading, probabilities are stacked against you. They put in those trading fees for a reason. Well, that's how they make money. And they want you to trade as many trades per year as you can, because the more you trade, the more you pay in fees, and the more money they make, the more money the broker makes, the more money the let's say the gurus get. Because let's say you use a link from a trading guru to sign up for a broker, and then that trading guru gets a percentage of the fees that the broker makes. So if you trade, I don't know, 100 trades per year, and you have 500 euros in trading fees, in that 1 year the broker will get 300, and the trading guru who signed you up with that broker will get around 200 euros. So basically everyone online incentivizes you to take as many trades as possible, because then they make the most money. Hey Ivy, what's up? How are you doing? Traveler says, lol, never again. I'm not sure what you mean. Maybe you mean like trading gurus or brokers. Which broker do I recommend? I recommend IC Markets. I don't have an affiliate link, because for some reason, if you're in Europe, you cannot get into their affiliate program. Otherwise, I would for sure. But again, IC Markets has been the most reliable broker in my experience. Best spreads. Commissions are a bit high, but you want those good spreads. You want to have a reliable broker. I made many withdrawals with them. Never had issues. My friends Griff and Nico made a lot of withdrawals as well. Never had issues. So yeah, definitely a reliable broker. Avi says, got any new challenges start of this year with prop firms? So I just lost a Alpha Capital challenge today, which was in stage 2. I took an AJ trade. I took this one. 1 hour. So I took a loss right here, and I unfortunately breached the max drawdown for Alpha Capital. Game plan is FTMO. So FTMO, best prop firm, most reliable prop firm. You can trade through news with their swing account option, which is always great. And I'm definitely gonna buy at least one 100K challenge sometime, let's say in the next few weeks or months. I want to even get some more, but we'll see. So plan is FTMO and at least a 100K challenge. I even want to buy maybe 2 or 3 of them. Getting back to the charts, we stopped at gold. Gold looks really bullish. So I think this is an all-time high. I'm not sure. I'm not that much into gold, but we have been kind of flat and corrective here for a while. But then Trump got into office and we had, boom, just an explosion to the upside. Broke this high. No issues so far. I'm pretty bullish on gold as well as indices. Very nice simple sup. This was very nice as well. Nice momentum. Looking at any setups, nothing really would have fit my plan if I was trading gold. Okay, I see some setups. I see some flags. Here's a flag. Here, I think I saw one. Here's no, this is not a flag. But here we may get like a flag or a break and retest. So gold looks very good. Silver follows gold. So it's not looking that good though. It's looking kind of flat. Yeah, gold looks much, much, much better. What is interesting is Bitcoin. Bitcoin is very bullish right now, hovering just below the all-time high at 109. So hovering just below 109. This was Trump coming into office, and we just had an explosion up. Yes, we're still stuck in range. Don't get me wrong, but I think we want to break out. I think we do want to break out. I think we are pretty bullish. I think this looks pretty healthy, and I expect more upside for Bitcoin. Ethereum has just been down the drain. I do have Bitcoin and I have Ethereum, but I have more Bitcoin. Fortunately, Ethereum has been in the crapper. It just looks so bad. I don't know why. Like Bitcoin looks so healthy right here, and then you have Ethereum just could not even stay at these levels. Bitcoin is a better bet, at least right now. So yeah, Ethereum. Let me just check out Ripple. Damn, Ripple is pretty healthy. See, I wish Ethereum was like Ripple. Oh, this is amazing. Let me check out the monthly chart. Wow, this is absolutely amazing. But yeah, it is what it is. Ethereum doing its thing, focuses on Bitcoin. That's the leader. That's the main cryptocurrency. DXY, very important dollar index. You want to just know what the general direction of the dollar index is. And it's getting a bit bearish. So getting a bit bearish. Also, we're coming pretty much to the end of the stream. So if you guys have any questions, any chart requests, make sure to put it in the chat and I'll go through them. We still have like 1 or 2 instruments to go through. So DXY is kind of has broken out of this lower trend line, you could say, getting some bearish pressure. Will we get a big drop, big sell-off? I did talk about in my last live stream, I talked about how Trump wants to keep the dollar weak. He wants the dollar to go down. So what he wants to see is this to happen. Okay, he would like that. What is the reason? Well, if the dollar is cheap, if the dollar is low in value, then it attracts a lot of foreign investors because they can then build buildings or invest very cheaply if the dollar is weak in value. Also, if let's say Chrysler is selling cars in Europe and the dollar is low in value, well, then it gives a big incentive for people in Europe to actually buy an American car because it's kind of cheaper. So the car would be cheaper if the dollar was here than if the dollar is here. Does that make sense? People would buy more American cars, which is then good for the US economy. So I talked about this, and my forecast actually for 2025 is for the dollar to overall lose some value. So I do think the probabilities are currently telling me that this could happen just because of Trump. Just because of Trump. Trump he has a pretty big influence. Also, Powell, who is currently controlling the Fed and controlling the value of the dollar. Let's not kid ourselves with interest rates because Powell and the Fed, they control interest rates. Trump doesn't like Powell, but Powell is only staying until the end of this year. And then next year, 2026, I think a new guy may be coming in as the head of the Fed, and Trump may put in his own, let's say, colleague or friend in that position. So then that guy will pretty much listen to Trump, and Trump will tell him, look, you need to cut rates because we need to lower the value of the dollar, right? So maybe even in 2026, you could see a big influence from Trump for the Fed to push the markets lower. You never know. You never know. It's a pretty wild world and wild game with these interest rates. Even the Fed doesn't know like what they're doing, in my personal opinion. Not that they don't know what they're doing, but they're pretty much guessing. It's a big guessing game. It's very hard to anticipate interest rates. So they're doing their best, but it's still a very big factor of uncertainty for the future. And their forecasts for the future have been really bad lately. That's at least what I've been reading. So then they don't really know what will happen in the future, which is understandable. Is it good for us? It is, because we like uncertainty. We like when people are not sure what is going to happen, because then they make erratic decisions. Then you get a lot of trends in the markets. That's it for the DXY. The final one is going to be US oil. US oil, I really don't like. I really don't like analyzing. I have never traded it. It looks very corrective to me. Very choppy price action. This is the daily chart. And just compare like this trend on EU or this one on EJ, which is much cleaner than US oil. US oil is just so choppy, and I don't like the price action. But it's moving. Lately it has been moving. We have had a big uptrend and then a big downtrend as well. Really respecting those trend lines on the 1 hour. So respecting this trend line. And right now, I would say it's bearish. The daily chart is very bearish. We are getting a lot of selling pressure here. So yes, we were in a very nice uptrend right here. But then now we're dropping and we are in a pretty strong downtrend. So a big correction, like a big V reversal. And if you guys don't know, in my experience, a V reversal, this is an inverse V reversal because it looks like a V. See, inverse V reversal is actually a bearish pattern. So usually this happens after you see a V reversal. That's about it. We have reached the end of our analysis. We have broken down every single pair. Quick summary of this live stream. So we have had a lot of events in January. They have now passed. We had Trump coming into office, Fed meeting, Bank of Japan meeting, ECB meeting, so European Central Bank. And I think we're ready to get some trends. I think we're ready. January can sometimes be slow, but in my experience, February, March, April, very, very good months. Very, very good months. Almost every single year we have made, even in our back testing, even in like, I don't know, 2018 or 2019, we have made quite good percentage in those months. They usually tend to be pretty active. Beginning of the year, when markets do heat up, they do need some time to heat up, but when they do heat up, you can get some very nice trades. So I'm being alert, staying patient, looking at the charts. I got my first trade now in like 30 days. I think for the last 30 days, I haven't taken any trades. So that's another sign that markets may be heating up a little bit because I'm starting to get some trades. Also, remember my win rate is pretty low, 20 to 30%. So most trades I take will be losses, but that's the way it goes. So yeah, only one on my watch list, just to repeat, is the Aussie and the US dollar on the 1 hour chart, producing some high probability price action, producing a nice descending channel with consecutive breaks of the low. Rest, not that great. So have a great rest of the week. Have a great weekend. And I think for some action, we're going to have to wait for the next week. So that's it for this video. See you guys in the next one.